Hello, everybody. Welcome to Zoe's Treasures. My name's Tracy, and I'm here with my husband, Noel. He's back there running those graphics and doing our cameras for us. Tonight, we are doing our continuation of our live seller collection business and tax series. So we do this every single Friday. So we have a 52-week series, and we have a new topic every week that kind of build on each other. We are on week 20. So this morning, we talked about how to grow your business without losing control. And we're going to expand on that a little bit tonight and talk about how and when to pay for help properly. So hopefully maybe you guys are here to get some information on how and when to pay for help. And it's going to be a good chat. So if you have any questions, feel free to put them in the chat. Always happy to answer any questions. If you do not know me, I am a CPA, have over 30 years of experience. I'm licensed in 2 states. And I have a little bit of experience in tax. So I do have a master's degree in taxation. Oh, my husband's giving me the be quiet sign. What's wrong? Are we good? Okay. I'm getting some weird hand signals over there. Is there any way to see past episodes? Absolutely. Everything we do is multicast to YouTube. So it is the same name, Zoe's Treasures on YouTube. And you can go there and you can look under the live seller collection, and all of those talks are there. We also have all of our other shows on there too. So we have our selling shows and our accounting shows. So if you're ever interested, that's where you can go. Let me get these words off the screen. We are going to run some giveaways during these shows. I usually like to run CEO affirmation cards. So we're going to get one of those started. They're little packs of cards. It is a CEO affirmation card that we created. That's what you're going to get in the giveaway. Well, hello, I Love Discounts. Do you not have a show right now? I thought you had a show. Nope, maybe not. All right. If so, maybe we'll raid into you. We'll see. We'll be here for about an hour, maybe a little bit longer. But let's go ahead and jump right into it. So, how and when to pay for help properly. This may be an awkward topic to some people because like paying for help, and when we start talking about people's money, it gets a little awkward sometimes. But once you start growing, you're going to hit a spot where you need some help. You may already be thinking, oh, CG roast in 40 minutes. Gotcha. Okay. You may already be thinking, I need help packing. Maybe you want to hire somebody to stream for you. Maybe you need just help sorting, organizing, keeping track of your inventory. All of those are normal things that as we start to grow. Or maybe it's you need somebody to do your social media for you. We're going to talk about you need help. There we go. Look, I just hired my daughter for the first time, so I am in the same boat. I just recently, about 6 months ago, got to a point where I knew I couldn't grow anymore if I didn't free up my time to do other things. So that's what we're talking about tonight. So paying for help could be one of the smartest business decisions that you make, because again, what it does is we start Whatnot. It's usually all us. All of our time, we're doing everything. Well, it gets to a point that you can only do so much, and that starts to inhibit your growth. So in order for you to grow, you have to start taking stuff off of your plate and having people to delegate to. Well, if you don't have a husband who's retired like I do, then you might not have people just to delegate to. He says I keep him busy, that I work him too hard. So that's when we have to start hiring help. And there's nothing, I mean, it's a great thing, but we want to make sure that we do it properly. We've all heard about, oh, just pay cash, do it under the table, do it this way, do it that way. It's out there, it exists. I don't condone it, but what I'm going to teach you, or what I'm going to talk to you about, is what is the right way to do it? What does the IRS say? How do you know the difference between an employee or a contractor? So that's the first topic, or first kind of a bullet point we have tonight, is how do you know the difference between an employee or a contractor? You need to classify these people correctly. Now, most people are going to be like, oh, they're just going to be a contractor because I don't want to deal with payroll taxes. It's not really your choice. Unfortunately, it's not really your choice. So first of all, let's define what is an employee, what's a contractor, just so we're all on the same page here. So an employee is one that you're going to pay their payroll taxes. You're going to match half of their Social Security, Medicare taxes. You're going to have to submit payroll tax returns, and they work for you. So you are responsible for them. Depending on your state laws, you may also have to have workers' comp insurance and be paying into the state unemployment. Versus a contractor is somebody who comes and works for you, and you're not paying them any payroll taxes. You have a set agreed upon price for a specific job that they are doing, and at the end of the year you issue what's called a 1099 to them if you meet the threshold to do so. So many businesses classify the help, the people that they pay, by convenience, whatever works for them. And again, we can't do that. You may hear things like, they only help sometimes, so they're a contractor, or they're my friend, it's super casual, it's okay, I'll just pay him cash, or I'm paying cash, so it's not really an official thing, right? It doesn't matter. The IRS doesn't care what you call it. At the end of the day, you can define that relationship with that person in any way you want. The IRS doesn't care. What they care about are the factors of the relationship and how that looks. So I'm going to give you some examples, some real life whatnot examples, and we're going to say if it's employee or contractor. So you hire somebody to do your packing and your shipping. You dictate what time they need to be there, how they need to pack. You train them on your process for packing. You supply all of their supplies. You supervise them. And I Love Discounts got it. Yep, that's an employee. That's not a contractor. That's not a 1099 person. Where on the other side, say you hire somebody to do some social media for you. You don't have time. You want to be posting on Instagram and TikTok every day, but you sure don't have time to do it. So you hire somebody. They work from their location. They use their own computer. They use their own editing software that they buy and they pay for. So all their own tools. And they just deliver you finished products in the form of social media posts. That's a contractor. Thank you, I Love Discounts. You're on top of it. That's a contractor. There's a vast difference in the way those services are being performed for you. I Love Discounts. You got that giveaway. Congratulations. Let's go ahead.
Congratulations.
About flipping time. You've won them before. All right, let's talk about another one. Let's say you hire an assistant. You need somebody to help just get yourself organized. You need maybe somebody to pull items off the shelf, put things away, run errands, do whatever you need in your business. If you set their schedule and they function as a primary part of your business, that's leaning towards employee. So it's not, sometimes it seems really cut and dry. Sometimes there's a gray area in there where you really have to go then to the IRS and look at their factors, which we're going to talk about, to decide if it's an employee or a contractor. We're going to get into why is this so important, what are the consequences to you and them on why you want to do this right. So what does the IRS focus on? They focus on control. So the control and the nature of the relationship. So behavioral control, and the IRS regulations actually name three things: behavioral control, financial control, and relationship factors. So we're going to go through this. Behavioral control, are you training them? Are you making them do it in a certain way? Such as when we were talking about the packer, they're following your system, your process, the way you want it done, versus you're hiring them for their expertise in what they do on their own. Big difference in that. So if you're, that would be called You're My Husband. So one of the things that yes, a husband. So one of the things you need to ask yourself when you're trying to figure out, how do I classify this person? Do I control how they do the work, or do I just get the result? So control. Do they use their own tools? So you can hire a shipper that's a contractor if they come pick up a tub full of your stuff, take it to their location, they supply the boxes, they do all that stuff, and bring you back nice packaged up items. That could be a contractor, but if they're coming to you using your tools on your schedule, your process, your system, that's an employee. So you can have the same job done in two different ways, and one be employee and one be contractor. You want to ask yourself, do they work for other people too? This is a big sign that they're a contractor, right? If they're also working for 5 or 6 other people, they're probably not your employee. And is this ongoing? Or is it scheduled like a project-based type thing? So is it ongoing and scheduled, or is this more just like a one-off, come do a project for me? So think about, some independent guy who you hire to paint your house. It's in your house. You may be picking out the paint color, but they're bringing their tools. They're working in their hours that, you guys figure out a schedule. It's a project that they're doing. That's a contractor type situation versus an employee. And it's really, really important to get it right. So here's the other part that confuses people. Cash payments still count. I'm going to say that again because this is where a lot of people get in trouble. Cash payments still count. You still have to know if they're an employee or a contractor, regardless if you're paying them cash or writing them checks. And when we say cash payment, that also applies to Venmo, Cash App, Zelle, PayPal, all those ways of transferring money, right? Paying in cash doesn't mean that it's just like this invisible transaction that nobody ever knows about. It's still a business transaction. So they're business payments, and if they're business payments, they need to be treated like business payments. Bye, we'll see you in a little bit. Thanks. Let's do some examples. Happy weekend. I know, finally it's Friday. So let's look at some examples about paying people hello in cash. So you have someone help you pull all your sold items, pack them up, and you hand them an envelope in cash. That's still a business transaction. What's going to happen with that? 2-3 months down the road, you're going to be like, oh wait, how much money did I pay them? It should have been completely written down, put in your books, and documented properly. Here's another one people think they can get away with without having it be a business transaction. You have a teen or a college student helping you out. You're like, oh, it's not really a job to them. They're a teenager, or they're just, a freshman in college. This isn't really a real job. I can just like slide it, under the table to them. It's still a business transaction. And here's another one that this one really gets people because this doesn't feel like business. When you do something for somebody and they pay you in something other than cash, like inventory, maybe you're helping a clothing seller, and at the end of, packing up some stuff for them, they're like, hey, why don't you go pick out an outfit for yourself? So there's an exchange going on there. That's still payment. That still has to be treated just like you're getting paid in cash. So all of those things are still business transactions. They're still all reportable to the IRS. Coastal Peacock, you got that giveaway. Congratulations. They're all reportable to the IRS. They're all deductible for you on your tax return if you do it correctly. It is not rigged. So never do any of these payments without writing it down. What do you need to keep track of when you make a payment, whether it's to an employee or a contractor? What are you keeping track of? The date, the amount, what it was for, who it was to, right? Let's see, making sure that we're classifying it correctly. Why is this so important? Because for employees, it's highly regulated. They have payroll taxes. There's quarterly tax returns that need to be done. For your employees, there's a ton of federal laws, state laws, and IRS regulations that apply to employees. For a contractor, you still have to report it at the end of the year on a 1099 if you meet the threshold. But also, if you don't track it for the payments you're making to a contractor, you can't deduct it on your return. So think about this. You hire somebody to do your shipping, and you're going to say they're a contractor, even if they're not. You're just going to call them that because that's what people do. And you're paying them cash all year long. None of that's deductible. You could pay somebody thousands of dollars, and then you're still paying tax on that money that you've now given to somebody else because you didn't do it properly. So you want to really make sure that you're classifying right, paying right, and documenting. And when we talk about documentation, it protects both sides. It protects you as the employer or the contract employer. It protects you as the business and protects the person working for you. So documentation isn't about like, oh, let's be corporate and do all this documentation. It's about being official. It's about creating a trail for yourself that protects you. Look at it like this. I hire my daughter. She lives in my house. There's special rules if you hire your dependent children. I still make her keep a time card. I pay her by the hour. I make her write down, and we have it in our shipping station, a little timesheet for her that we tally up every week, and we keep a running total of when she got paid, deduct it from the hours that she worked. So I still, even with my own child, make sure that it's a formal documented process. It's that important. Let's see. So we're going to talk about two perspectives here. When we talk about documentation, the perspectives are the actual act of paying somebody and then the responsibility and liability side of it. So there's kind of two things when we're talking about documentation. So like I was just talking about with my daughter, we document the hours and the pay. Well, the other thing you want to document, no matter who's working for you, employee or contractor, is what are they doing? What are the defined scope of what they're doing? What's the job responsibilities and all of that stuff? So think about it like this. Whether you have an employee or a contractor, maybe you hire them to do some shipping. What if something breaks? Whose responsibility is that? If they're a contractor, is it theirs? Do they have to pay if they break something? If it's an employee, is it your responsibility? So how does that work? That we're kind of covering ourselves and them from liability in situations. What about scope creep? Think about if you hire somebody to take photos. We hire somebody to take photos, and then all of a sudden, week after week, they're taking photos, and then they're answering some DMs, and then they're sorting some inventory. And now what started out as a photographer has grown into this multi-thing without any formal documentation. Another one, maybe a repeat helper, somebody who comes week after week. It was maybe supposed to be once, but all of a sudden they're coming over and over again. It's very easy to start as a contractor and have that role morph into an employee before you realize it. So it's something that you're constantly documenting, and as the role changes, you need to update that documentation and make sure that you're reevaluating the classification so that you're right at the end of the year. So what kind of documentation do you need for each one? So if you have hired a contractor, again, somebody who you don't control, they're doing their own job, their own tools, their own hours, you need an agreement. You should always have a basic agreement that defines what they are doing for you. What is the project that they're going to do? What's the final deliverable that they're going to provide to you? That should always be. Because if there's any disagreement, that's your legal document to fall back on. You should always maintain all of your invoices and all of your payments to your contractors. And then have a W-9 on file. This is a W-9 is a form that the contractor is going to fill out that provides their social security number, their address. You use that along with the payments you made to report it to the IRS at the end of the year. So anytime you have a contractor, you should have that W-9. Who's going to get that? Tia got that giveaway. Congratulations, Tia. Thanks for hanging out with us tonight. This is where a lot of people are like, oh, I'm not doing a W-9. I'm not giving you my social security number. I want this to be under the table. We as business owners have that responsibility. If you're going to hire a contractor and they're like, no, I don't fill that stuff out, you just pay me cash, that's when you as a business owner needs to stop and say, no, we're going to do this ethically, we're going to do this legally. That could be a difficult thing to do sometimes, because sometimes it's just easier just to pay them and get the help that you need, right? But we always have to make sure that it's being done properly. And I know, look, I'm not naive. I've been in the real world. I've been an auditor for years. I know it doesn't happen. People pay other people under the table, pay cash all the time. We're going to get to what happens if you get caught. And this is a reason I'm so big on doing it right. I've seen the other side, and I've seen the detriment and the problems it causes when you do get caught. So for employees, what do you need for an employee? So you hire somebody to do your shipping. What type of documentation? Number one is, yeah, you're going to get busted. You will eventually. And I'm going to tell you some of the ways you get busted. So for employees, you need a job description. You need a written job description for every employee you have that defines their roles and responsibilities. Can you get paid in tacos? Oh my goodness. He's supposed to be driving. Get off whatnot. You were supposed to be driving. That job description helps you give them assigned roles and responsibilities, and it helps them perform their job better. It gives them guidance and direction. A job description for an employee is no different than a business plan for you as a business owner. It defines what you're doing. Hello, Trish. Employees need to fill out a W-4. This is the equivalent of a W-9, but for employees. Most of you, if you've ever worked for somebody else, you have had to fill out a W-4. This is where you put in your social security, your address, and you tell them what are the deductions of federal withholding that you want withheld from those paychecks. Employees also need to fill out what's called an I-9. So there is a lot of legalities here, a lot of forms that need to be done if you're going to hire somebody and do it legally. An I-9 is a federal form that employees fill out to show that they are legally allowed to work in the United States. And then there could be, depending on the state you live in, specific state forms that need to be filled out. I'm not going to go into those. We have too many states for me to name all of them, but you would need to look at your state forms also. The other things you want to keep for employees is documentation, is some type of time card system. If you're big enough, you have some electronic system. If not, a minimum of a piece of paper. It could literally be a paper and pen that you're keeping track on. It doesn't have to be fancy, but it should be documented on a regular basis. We've gone through and we've already talked about the different forms. Let's talk about, as you're growing and you're scaling, how do you do that responsibly with hiring people to help you? The biggest part about being responsible when you're growing is the compliance side. That's what I keep talking about. Making sure you're doing it legally. We're not paying people under the table. We're classifying them right at the beginning. We're classifying them the correct way. We're documenting everything we need to document, and we're paying them the right way. And if it's an employee, we're paying payroll taxes. If it's a contractor, we're making sure we file that 1099 at the end of the year. So if you're growing your business, you have to do it responsibly. Here's some of the reasons why compliance is so important, why it protects you and protects that person working for you. There's legal risk. A big one is legal risk. There is financial risk. If you get caught misclassification, you can, let's just say you call somebody a contractor, but they're really an employee. If you get caught, you as a business owner can be subject to all of the years that person worked for you, all of their back employment taxes, penalties, and interest on that. That can be thousands upon thousands, if not hundreds of thousands of dollars that you would have to pay by misclassifying somebody, depending on the length of that, how long that employment lasted. One of the other reasons to protect yourself, loss of the business deduction. If you are paying somebody as a contractor and they should be an employee, where are you going to put that on your tax return? How are you going to classify that on your tax return? If you put it under contracted help, the IRS expects a 1099. But if you haven't got all the documentation you're supposed to have, you can't put it on your tax return. So if you're not doing it right, you lose thousands of dollars of a tax deduction. So not only are you taking money, giving it to somebody else, you're also paying tax on that same money. Makes no sense to me. And then the liability risk. What if they get hurt when they're working for you? If it's not done legally, Cracker Jack Box, you got that CEO affirmation card. Thanks for hanging out. There's a liability risk there. What if they get hurt on the job? What if they're a contractor and they get hurt for you? What if they're an employee and they get hurt? We're looking at workers' comp. We're looking at unemployment for an employee. If you are not set up properly, if you're not set up in the right manner on classifying them correctly and documenting everything, again, that's going to hurt you. And ultimately, it's going to hurt them because they won't be able to collect the benefits that they should have been entitled to because of whatever happened. So if we go down and look at some of the things for the employee or the contractor, if you misclassify it, and what the typical thing that happens is that it's supposed to be an employee, and we're like, nope, I don't want to pay I don't want to pay payroll taxes. I'm going to call them a contractor. That's typically where the misclassification comes in. It usually doesn't happen the other way around. What happens when that person wants to go and get a car, needs to take out a car loan, needs to get an apartment and prove their income, wants to buy a home and needs to prove their income? If you're paying them cash under the table, they have no way of doing any of this. You're hurting them. You're hurting them in their life by you not doing what's proper. So that's one of the reasons. No Social Security, Medicare is being paid for them. If they're supposed to be an employee, there's no payroll taxes being paid in on their behalf. That means that when they get to retirement, their retirement benefits are going to be lower because this hasn't been accumulated in Social Security. So if you have a 22, 23-year-old and they're supposed to be an employee and you classify them as a contractor, I can guarantee you that 22, 23-year-old's not thinking about how this is going to affect their retirements, their Social Security, Medicare when they hit 65. There's no way. At 22, you're thinking you're going to live forever. The last thing you're thinking about is what's going to happen when I'm 65 and I retire. But you should be as the employer. You're hurting them. You're hurting them in the long run by misclassifying them and trying to get by doing something cheaper or with less work. And if you were to go out of business or if you didn't want their services, they wouldn't be able to get unemployment. I don't know about you guys. Hopefully, none of you have had to experience unemployment, but it is a common thing. And unemployment, being able to go to your state and get unemployment is a lifesaver for many, many people while they're looking for another job. So that's how it hurts them, and us allowing it, where we may be doing something for ourselves, but by doing something easy, making it easy for us by calling them a contractor, we're ultimately hurting those people. That's not the way to get good help. That's not the way to be an ethical business. How about for you? We've talked about losing your deduction. If you're misclassifying them, you don't get to take that money on your tax return. That's a huge one. That's a really big motivator for me to make sure I'm doing things right, because I don't want to pay somebody and pay taxes on that money at the same time. The possible penalties that we talked about. If you get caught, you're going to have to pay back all of the payroll taxes plus the penalties, the interest. And usually there's the penalties include you didn't file those payroll taxes like you should have. And so you're paying back penalties like quarter after quarter after quarter. It's not just like one slap on the hand. It's a slap on the hand for every single payroll return that you didn't file. So also, this is where you get caught. This is where you're like, nobody's going to know. I'll pay them under the table. They're cool. I'm cool. Nobody's ever going to know. You know when they're going to know? When that person gets hurt and they want to come after you and get some money, when they slip and fall on your property, when there is no more money and they want to go to unemployment. These are the things that trigger audits. When maybe if they're older and you're paying them under the table and they go to file for Social Security. These are all of the items that trigger audits. That's when you get caught. Or when you go to file your tax return and you're like, heck with this, I'm still going to claim this money. I paid it, right? And you put that you paid $10,000 to this contractor and you send your Schedule C in and the IRS writes you a nice little letter and says, I see you paid $10,000 to a contractor. Where's the 1099 you were supposed to file? That's when you get caught. A lot of people think, oh, I can get away with this. And you may for a few years get away with it. Ultimately, it comes out. And I've seen it happen. I've dealt with clients who are digging out of messes like that. And big, huge penalties and fines like that can completely demolish your business, particularly for small businesses. So what do we do? All right, so we've heard about this. I've given you worst case scenario, set up this whole disaster story for you. So what do we do to prevent this? We plan. Planning prevents all of this. So penalties, when these penalties happen, Tia, you got the other giveaway. Congratulations. Penalties happen usually not because somebody's bad. It's usually because we are super busy. How many of you here feel like you are nonstop? You got a busy personal life. You got a busy whatnot life. It is go, 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 right? Typically, we do things because it's easy or it's convenient. And sometimes we don't do it right because it's the wrong way is easier or convenient. So we try to take the approach that people aren't bad people. They're busy, right? Well, it doesn't matter how busy we are. We still have to stop and we still have to plan. A lack of planning due to being busy in your life doesn't protect you on anything. So before you hire help, there's 5 things you need to kind of think about when you're like, okay, look, I'm at that point of growing. What do I need to be thinking about? We need to think about, first of all, how do we classify this person? What is the job that I am hiring for? So let's define it. Let's define exactly what you're hiring for so we can understand if it's an employee or if it's a contractor. So that's the very first thing you should do is figure out I am hiring an employee or I'm going to hire a contractor before you even hire them. That you should totally know what you're hiring for. You're going to figure out what is the method of payment. Are you writing them payroll checks? Are you going to hire a payroll service like Gusto? Or are you going to go through QuickBooks and actually use a payroll service if it's an employee? Are you going to do all of that on your own if it's an employee? If it's a contractor that you're hiring, you should be making sure that you're writing checks or having some type of a direct deposit type system going where you can keep really good records of it. Take care of all that paperwork we talked about. That's the other thing. You're going to want to, before you hire them, understand your state regulations. What are those laws? Have those W-9s, W-4s, all of the paperwork you need, the I-9s, to make sure that they're filling out the proper paperwork at the very start of their employment, not 3 or 4 weeks into it. You're going to have to figure out how often will they be paid. So this is something and again, this is before you hire somebody. These are all things you should be considering before you even actually start talking to a candidate that's going to work for you. How often are they going to be paid? Is it a contractor? I'm going to pay you half at the beginning and then the other half when the job is complete. Is it an employee? I'm going to pay you once a month, on the 1st, on the 15th, every other Friday. What is that cadence of pay for either or? And then how are you going to keep all that organized? If you've never had an employee before, there's a lot of paperwork. There's a lot of quarterly payroll tax returns, doing the payroll, submitting the payroll tax to the IRS within so many days after each payroll. There's a lot of time limits that if you miss those time limits, you're going to get penalized for. So there's being organized about it and having a system in place before you start it will save you a lot of headache and save you a lot of penalties on the IRS, particularly when it comes to employees. The IRS isn't too nice about it. The first time you make a little mistake, they may slap your hand. The next time it's going to cost you. You're going to have to write a check for your mistake. Whatnot doesn't require sellers to have a business license, correct? Should I get one and consider myself as a self-employed and pay myself a salary? So Cajun, you could pay yourself a salary, but as a sole proprietor, you don't need to. So you do not need, as a sole proprietor, you do not need to pay yourself a salary. You just pull money out. Now, if it is full-time and you want to pay into the payroll system, you want to start building up for your Social Security, for your retirement, you can absolutely pay yourself a salary. If you're the only employee, there's no reason to get a business license. You can still pay yourself a salary if you're the only employee. You get an EIN number from the IRS, an employer identification number, and if you don't know how to do the payroll taxes yourself, you sign up with a service like Gusto or QuickBooks, and there's a million other like payroll type services that you can get. On the flip side of that, as a sole proprietor, we are not required to pay salaries. We're not required to do payroll in that manner. As a sole proprietor, for us as owners of the business, we could take as much money out as we want. The IRS doesn't care. The IRS can care less how much money you take out or put in your business. What the IRS cares about is what your net profit is. And what you're taking out has nothing at all to do with your net profit. So your net profit maybe at the end of the year is $50,000. You could have taken all $50,000 of that, and it's still $50,000 you're going to pay tax on. Hope that makes sense. But if you are looking, we go back to this side again of paying in Social Security, Medicare, maybe setting up some type of retirement accounts. Absolutely set it up. Now there's also other ways to do retirement without setting it up as an employee. Tabitha, you got that giveaway. There are a lot of types of IRAs and other retirement vehicles that you can invest in also without setting yourself up as an employee. So hopefully that answered your question. And that's all that that I have on how to pay people properly. So if you need at the point where you need to hire help, it's a good thing. The main point about it is making sure you're doing it right. It saves you and the person working for you a ton of trouble. So here's another little tip. I didn't include it in my notes, but here's something that a lot of people don't know. If you have children that are listed as dependents on your tax return, you can actually hire them in your business without having to pay them payroll. So they're allowed to make up to, and I don't know the limit off the top of my head, it's around $13,000 or $14,000 a year, tax-free. Basically, you don't have to file payroll taxes, you don't have to do the quarterly taxes, you don't have to put in Social Security or Medicare. They don't have to claim it because it's underneath the standard deduction for them, but you can deduct that on your tax return. So you can get a big chunk of tax savings by hiring your dependent children to work in your business. Now, there's a few little caveats to that. So if that's a route you're going to take, I definitely suggest making sure that you're doing it all on the up and up and talk to your tax preparer about it. But it's a great way to save some money on your taxes and give your teenager a little bit of spending money on their own. One of the caveats is they actually do have to work in the business. They actually have to have some responsibilities in the business. And if you're audited, you need to be able to prove those responsibilities. That's one of the reasons why my daughter, my 15-year-old working for me, we keep a timesheet for her. So that's a way to hire somebody without kind of going through a lot of the stuff we've just talked about. So, are there any questions on this or questions on other tax or accounting type stuff? We're going to be here every Friday night. Again, on Fridays, I do the Live Seller Collection. In the morning at 7 a.m., we start with a business topic. Today was how to grow your business and maintain control. So don't grow with chaos, but grow intentionally and in a structured manner. That's what we talked about this morning. Our business ones, we usually talk for about 2 hours, sometimes a little bit longer. Where's your timesheet? That is my husband. If you don't know, Zoe's Team Mod is my husband. He works for free for me. So he thinks he doesn't work for free. He keeps asking for money, and I don't know. I keep telling him that he's not on the payroll. So we do business talks in the morning, and then at 7 o'clock at night, we'll come and cover a tax topic. So I'm hoping that this will grow a little bit as we continue moving forward. During poor Noel, don't feel sorry for him. During tax season, it was really popular. Everybody was thinking about their taxes, but we do have a whole series here. Let me pin it and I will show you on this listing here on our notification. If you click on that, the pictures, we do have the schedule of everything we talk about. So every Friday planned out for the rest of the year. So if there's specific topics you're interested in, you'll know, hey, I really want to be at this show because they're talking about something that is of real interest to me. And then on Friday evenings, we'll come and we do the tax. I used to do them all together. But I felt that I was rushing through and I didn't like that, so we've just separated it out. And then some of the other stuff we do is on Monday nights, we do an accounting course. So Ledger to Leadership, we are in week 11. It's a 12-week course, so we're nearing the end of this course. We will repeat it later on in the year. And it is a free accounting course for resellers. So this is the book for it. I'll put up the PDF version. Let's see if I can find it here really quick. Here's the PDF version of that. And we actually go through and we talk starting from the accounting equation, how to create your own financials, and how to read them. Those are on YouTube. Also, if you ever want to just go back and look and figure out how to do something with your books, those answers are there. So, and some of the other stuff I will talk about, we do have other books available that go along with our Friday chats. And then we also have a whole guide library. I'm trying to find it right now here, if I can find it. We have this right here is a whole, oops, I edit. I don't want to edit. What am I doing? I want to pin. This is a whole library. It gives you access to 31 different guides and Excel templates and any new ones that we ever put in there. So it's basically, it's one time you buy it and you get access forever to whatever is there and whatever I add in the future. And we add probably 2 or 3 a month, give or take. Some months we add a lot more, some are a little less, just kind of depending on how busy I am that month. But that's what we do. A little bit about me, my background, in case you're not familiar with who I am. I say that like I'm somebody special. I'm not really. Let me get this off the screen because I hate all the words on the screen. Okay, so I went to school for accounting. I went to school later in life. I was 30 years old before I started college due to, I just did life backwards. I had a baby, then got married, and then went to college. Thank you, Tabitha. So I started school when I was 30 years old. I went for my bachelor's degree in business and accounting. Then I did a master's degree in accounting with a focus in taxation. And then I have worked in the accounting field for over 30 years. I've been a licensed CPA for going on 15 years. I used to be licensed in Florida and Georgia, no longer there. I am now licensed in Pennsylvania and Maryland. I work for a global accounting firm as I worked as a client-facing auditor for many years. Before that, I worked as a CFO in a nonprofit organization. And now I work for the same global accounting firm, but I am not client-facing. I write trainings and I teach. So, well, Chris, thank you for being here. I'm glad you found me. Accounting, business, tax is my passion to bring to resellers. When I came to Whatnot 2.5 years ago, I also sell vintage decor, just a little thing in there. I sell vintage decor, but I came to Whatnot to sell vintage decor 2.5 years ago and quickly realized that most people come here to sell what they love. They don't come here because they have a lot of business background or accounting background. So I decided to merge the two and bring my two passions together. Thank you for your purchase from the bin. I bring my two passions together and I do a lot of the business, accounting, and tax shows throughout the year. So every week there's always something I'm bringing on those fronts. And I have a lot of other things in the works. So there's, besides Whatnot, there's a lot of other type of business and accounting focus. That is where my main focus is in growing my business. So you will see other things. If you hang around, come to shows, you will see things pop up here and there. And something I announced this morning that we're working on, for any of you who may be in the Pennsylvania area, I am organizing a Pennsylvania meetup. So if you happen to be in Pennsylvania or within driving distance, at the end of September, we will be doing a meetup. I'm going to be giving information out on that on Friday mornings. So as we start to firm up the location, the exact date, all of that, we'll be dispersing all of that information on Friday mornings. And we have a website if you'd like to check out, zoestreasures.com. It's the same name, zoestreasures.com. Some of our links we're still working on. We're using AI to create the website. It's quite an experience. Hello, Birdie. But we are starting to expand that to include a lot of different information, links to our YouTube videos and stuff like that. So with that, I think we're going to go find somebody to rate unless you have some questions. Normally I like to stay on for about an hour, but it really just depends on how heavy the topic is and how many questions people have. So Bernie, it is, you can always go to YouTube and see it, and we're going to be back every Friday night. So I like to do 7 o'clock. I do Monday, Wednesday, Friday mornings at 7 a.m., Friday nights at 7 p.m. And then tomorrow morning, y'all, real quick before we go, let me do a plug for Bougie for a Buck. If you guys like yourself some really good, high-quality vintage items, this stuff here, everything, let me move out of your way real quick. Everything back here, all of that goodness back there, those are not Temu. Those are real hens on a nest. Those are up for sale tomorrow morning at 8 a.m. Everything starts for $1. So if any of that interests you, go throw your pre-bids in there. Hold on, let me get back on my chair. You can put your pre-bids in there, but we are doing Bougie for a Buck. Thank you, Go With The Flow. I am a firm believer in the dollar starts. I don't believe that it works for everybody. I don't believe it is for everybody, but for me, it works. And this is a lot of what we talk about on Fridays, not just dollar starts, but we talk about how to structure your business, how to make your business work for you. And to prove the point that I believe dollar starts works, putting my money where my mouth is by doing a Bougie for a Buck show. Normally in all my Saturday shows, everything does start at $1, but I typically don't have as many high-end items in a show. I have more of a mixture. The other thing too that you guys might want to check out, if Whatnot business, just any of the Whatnot topics or any reselling topics interest you, I have joined forces with 2 other really popular Whatnot sellers. And we do a podcast every Sunday night at 6:30 on YouTube. It is called the Reselling Roundtable. It is a live podcast, so you can come like you come to a Whatnot show and ask questions. It is myself, Green 13, which is Jeremy, and I Love Discounts, which is Tony and Lysandra. We all come together every Sunday night. That is Reselling Roundtable. If my husband was here, he would put that on the screen, but I don't have access. Oh, there it goes right there. Reselling Roundtable. And that's a really good one. This Sunday, we have a different topic we cover every week. This Sunday, we are talking about chat shows, the good, the bad, and the ugly, and all in between on chat shows. And the cool thing about that one is because we're on YouTube, we can talk about all platforms freely. When we're on Whatnot, we have to be careful about other platforms, but on that one, we can talk about all platforms. So if you're a reseller and you resell in more ways than one, come and see us there. Can I ask how you count giveaways on your taxes? Never have done them. Can you write the cost of the giving and shipping? Absolutely you can, B. Haynes. Absolutely. So let's look at giveaways in 2 different ways. For me, I do my CEO affirmation cards and vintage postcards. Those are things that I have either created or purchased specifically for giveaways. So when I buy those items, they immediately go under my marketing expense because I am buying those specifically to give away. So the cost of the item that I'm giving away is my marketing expense. Then when I pay shipping for those, that becomes shipping expense that I can write off on my taxes. Now, if you're doing a giveaway where you're like, oh, I'm going to do a show and I do jewelry and I'm going to pick a piece of jewelry out of my inventory to give away because it makes sense, right? Then that jewelry is sitting in your inventory. What you can do is you take it out of inventory and you put it down under your, you really want to put it under cost of goods, you put it down as a marketing expense. So you remove it from your inventory and you record it as a marketing expense. So either way, whether you're buying stuff specifically to give away or whether you're pulling stuff out of your inventory to give away, the cost of the item and the shipping is all included as a deductible expense on your tax return. And particularly it goes under marketing or advertising. There are a lot of things that people don't realize are tax deductible. During the tax season, January through April, these Friday night shows are really focused on specifically, we go through a Schedule C. Most of those are on YouTube also, just in case. If you did an extension on your tax return and you're still figuring it out, I have all of those on YouTube where I actually broke down the Schedule C line by line and talk about each and every line and how to figure things out. But there are a lot of expenses that people don't realize that you can deduct, besides the typical mileage, home office. So definitely check that out. And if you have any questions, feel free to message me or come to any of these shows and put them in the chat. Even if I'm talking a business topic, feel free to always put something in the chat. I'm still figuring out shipping. If I get hit with a shipping charge, yes, that is tax deductible. If you pay any shipping out of pocket that you pay is a tax deduction on your tax return. 100%, because it's a business expense. So a really easy way to understand if something is deductible or not, the IRS says there's two words that you have to be concerned with: ordinary and necessary. If the expense you paid is ordinary and necessary for your business, then it's tax deductible as a business expense. So when you think about that, that can mean different things to different businesses. So this is why you'll hear people on Whatnot say, oh, there's special deductions for resellers. Make sure you get an accountant that knows reselling. That's a bunch of baloney. Let me just tell you, there are no special deductions for resellers. What there is certain business expenses that are more common to resellers than to somebody else. For example, if you're a race car driver, buying an engine for your car would be a legitimate business expense. It is ordinary and necessary for you to have an engine in your race car. If you buy an engine for your car on Whatnot, that's not really an ordinary and necessary business expense for a Whatnot business. It's the same rules, but different things apply based on the business that you're in because it has to be ordinary and necessary.
I'm back. I have to go get tacos.
He's back. He come back just for the end of the show. Private plane, yes. I wish a private plane. I wish I can just hire a chauffeur to come up in my limo and drive my packages to the post office. That may be ordinary and necessary in some very high-end neighborhood, but not out here in the country where I live. So yeah, you have to think if it's ordinary and necessary in the business. Those are the two words that the IRS uses. I get very... Yep, internet's absolutely, Taco Cat Lady, absolutely a deduction. So what you've got to think about with the internet, though, is do you also use that in a personal capacity? If we have one internet service coming into our house, we probably are also using it to watch Netflix, surf the web on to do personal stuff, watch the other TV shows. Maybe our kids or our spouses are using it for their personal stuff. So not all of it, it's not 100% deductible. Yep, and if you had to upgrade. So what you need to do is to take your internet bill and you figure out logically, and there's no set rule on how to do this, how much of that internet is logically used for your business.
You can check your analytics, and depending on the hours that you went live, you can utilize that as a base.
That's a good way. Yeah.
And then if you're shipping, how many hours did it take you to ship your show and utilize your computer for the shipping?
Absolutely. So. And that's a perfect way. And this is if you're ever audited, this isn't something that you just like, I'm going to do my tax return and send this to the IRS, but you document how you came up with that. Conclusions, you say, okay, well, I spend 30 hours a week on my Whatnot business. Over the course of the month, it equals this many hours. I'm going to say it's, 60% of my bill is put towards my business expenses. You figure that out, you write it down, and then you reevaluate that every year and keep that documentation with your taxes. You don't need a timesheet. You just need at least once a year to figure out some reasonable way, and it doesn't have to be an essay. It could literally be a couple of lines on a piece of paper that you just put with your tax return documents, just in case you're ever audited. Because think about this. If the IRS comes to you and says, they come to you next year in 2027 and say, hey, we're going to audit you for 2024. How did you figure out that 60% of your internet was business expense? That was like 3 years ago. I won't remember that. Most of us won't. So that's right. Just write a couple of lines, put it with your tax paperwork, and then you're going to pull this out, and the IRS agent's going to go, oh, wow, man, you actually wrote that down 3 years ago? It's going to look so much better for you, so that having that type of documentation and having it consistently year after year really just protects you. And it doesn't take that much more time. You've got to figure it out anyway, so take the time to write a couple of sentences on what was your line of thinking, what was your logic behind it. And as long as it's reasonable, you're not going to have problems. So Taco Cat Lady, yours may be 60 or 70%, mine may be 30%. So it's not going to look the same for every person. This is why it's so dangerous to listen to other people, other sellers who say, oh, well, my accountant said you could write this off. My accountant said this. Your accountant is looking at your information, is giving advice for your situation. So I get a little touchy during tax season with everybody spouting off their advice from their accountants. I'm sure they have very smart accountants, but those accountants are advising them for their situation. I do try to give you general advice. I will also, if you ever have questions, you can message me, just send me a DM through Whatnot, and I will freely tell you where to go on the IRS website to find the information you need. So besides telling you the information, I will also back it up by telling you it's in this publication, go look at this, so that you actually have the real rules. No different than telling you to go to Terms of Service and read what Whatnot says for the rules. You cannot claim manicures. Yeah, people will tell you that. People will say, you can claim your clothes because you're on camera. You can claim your manicures because your hands have to be on the camera. You can't. The IRS is really specific that if it's not ordinary and necessary for your business, nails are not ordinary and necessary for a Whatnot business. They're just not. Now, if you are a hand model, it may be ordinary and necessary for a hand model, like somebody specifically hired to do modeling of their hands for photo shoots of some sort, not for Whatnot. That's what happens is that you'll hear one rule and it may apply in one situation, but not in another, because of people telling you this, they don't go back to the ordinary and necessary, which are the exact two words the IRS uses over and over and over in their publications. So you're going to hear a lot of misinformation. You're going to hear that you can take business trips and take your family with you and write it all off. That's a misconception. The business expense for you is deductible, 50% of your meals. But if your kids, what do they do in your business? Even with my child working in my business, I would never include her as in traveling as a business expense, because it's not necessary for her to go on a business trip at 15 years old. So you got to be very logical about it. I'm also, if you listen to me, I am very, very conservative. I'm going to stay on the right side of the law. I don't walk the gray line. I don't take a lot of risk with taxes. I do not feel, I feel that my business and everybody else's business is too important to put it at risk with the IRS. So I am going to be very, very far over here. This is also why you can have two different accountants and maybe have slightly different answers, because one may be more riskier than the other. Yes, you can. You can count hotel stays if it is for business travel. So the summit that just happened, the Seller Summit in Austin, we went there, my husband and I did. We flew down on Friday. Friday night's hotel is a business expense. Saturday night hotel was a business expense, and we flew home on Sunday. Our airfare to go there was a business expense. 50% of the meals that we had while we were there are legitimate business expense. The rental car we had is legitimate business expense. The parking for our truck at the airport while we flew is a business expense, because what we did was a business trip. Now, did we go out to dinner one night with some friends and have a good time? Absolutely. The IRS doesn't care about that. The IRS cares about the main purpose of the trip. So if you're sourcing in another state and the main purpose is to source, but your sister happens to live there too, and you got to spend some time with her at the beach, that's okay. As long as you're not counting, if you spend 3 days at the beach and 2 days sourcing, well, the 2 days of the trip are the deductible part of the trip, right? You have to apply logic to it. You have to put yourself on the other side and say, if I were the IRS, what would be appropriate here, right? If you're going to meetups, the Pennsylvania meetup we're planning, if you're traveling to any Whatnot meetups, those are business expenses. So there's a lot that can be deducted. And I give this little speech. If you've seen it before, I'm sorry, I'm going to show it again. I give this example almost every time I talk about taxes. January 1st, the beginning of every tax year, we have zero income. This is your book income, zero book income, zero tax income. So book and tax, they're equal. During the year, as business owners, our goal is to get our book income, our net profit, up as high as we can, right? We want to make as much money as we can. But our goal at the end of the year is to get that taxable income as low as we can because we want to pay the least amount of taxes. So all this space in between, that's called tax planning. So the more we start here, our income grows. The more we do tax planning, the better we can lower our taxable income by taking advantage of all of these legal deductions that we can take. So hopefully we're paying very little in tax, even if we make a lot of money. And it's not about loopholes. There's really no such thing as loopholes. Another myth I'm going to dispel here. This is on my little bandwagon that I get on. You hear a lot of things. Oh, the rich get these loopholes. They get this and that. No, they don't. Actually, the rich pay more taxes than almost every other person in this country. What happens is the more money you have, the more disposable income you have to hire CPAs, financial planners, and tax attorneys who are very well versed and educated in all of the tax laws, and they know how to mix and match and use them in the legal manner. They're not a loophole. They're paying for the best advice out there in order to do that, and they have the money to do that. Whereas the average Joe out here probably is going to H&R Block or using TurboTax and not getting all of that super expert advice. So these are just a lot of the misconceptions we hear. We all live off of and have to work off of the same tax law. And it's just how you apply it. So that's part of the reason I do this, is because y'all didn't come here because you love taxes. You came here because you want to sell and make money. But I love taxes. So I can at least try to depart as much of these tax information that I can possibly depart to everybody to help maybe save you some money at the end of the year. Give it up. I am never going to pay you. I put a roof over your head. There you go. That didn't come out right. That sounded a little mean. I do love you. So that's my soapbox. With that, I am going to, we're going to go raid. We're going to go see. I think I Love Discounts has probably heard theirs over, but let's see if they're on. They may be getting ready to raid. I'm sorry, who's on? He's going to find us somebody. Oh, Southern Charm is on. We're going to go see her. If you guys don't know Southern Charm, she is one of my whatnot besties. She is probably selling jewelry tonight. She is amazing. She is the sweetest person, and I just got to see her in person recently. So we're going to go rate her. Again, check me out on YouTube, and we are here every Friday morning and every Friday night. Y'all have a good weekend.